Good morning, everybody. This is the live market open for Thursday, October 29th. I'm Yohay Elam, ForexCrunch.com and Market Movers podcast, doing the show for a fixed rate. And we're going to talk about the Fed, but not only the Fed today. As always, we welcome your questions. If you can't see the chat, please go to tlk.io/fixed-rate-forex-live-video. Going to talk about charts and levels, and we have also quite a few events in the next 24 hours. So good morning, everybody. Good morning, Jack Sorwell. We already have a few questions from you, and we'll reach all of them quite soon. So recent data, recent event was the Fed decision. What happened in the United States? Well, here are the main, the 4 key points that I see regarding what the Fed said, okay? So basically, the Fed acknowledged some kind of slowdown in the economy, but still sees it as growing. That relates to employment. Employment slowed, but still growing at a steady pace. The slack is diminishing. If we look at inflation, it's a bit lower, but the long-term surveys, the long-term expectations are quite stable. Everything looks okay, all right? Now, the more important change is not only acknowledging some weakness and shrugging it a bit off, but they removed the reference to recent and global financial developments, okay? Did China recover since the last meeting? No, not exactly. But turmoil in markets is much smoother. So the Fed is looking at financial markets, stock markets, and now it sees some stability. So it's not that worried about that. Of course, we'll hear more in the minutes, but at the moment, it looks okay. And perhaps the most important thing, when they talked about when assessing to raise rates, they added these two words, next meeting. So this was a hint that they'll consider raising the rates next meeting. That means in December. That means a hike in 2015 is firmly on the table. And of course, they then said it depends well on data, international markets, quite a few things. All right. But all in all, it was a hawkish statement. They were expected not to rock the boat, but they did. So we had quite a few. We had some reactions in markets. Let's now look at the charts. So euro dollar, well, it's quite clear to see monetary policy divergence. We can see at the top left of the chart, euro dollar was trading, well, 113, even 114, and then Draghi came, hit it all the way to 110. Recovery. Even yesterday, we had some kind of rally because one central banker from Estonia said that more QE is not so close, but that was just a bigger sell opportunity. Euro dollar fell all the way to 108.96. Well, it recovered above 109 and already reached today 109.45. But as you can see, it's probably another dead cat bounce for euro dollar. So we have support at 109, resistance 109.50, high resistance 110. Okay, we just had from Spain, from where I'm sitting here, we had the CPI figures that came out worse than expected. So deflation is a bit deeper. This supports the case, of course, for more QE in the Eurozone. So we had a strong reaction on euro dollar. Pound dollar, a bit more moderate reaction, but the pair lost the 153 line it was battling with. Next support is here at 152. Further support at 150, 150. 153 now turns into resistance. We have a small release from the UK after the show in net lending to individuals. It's not that important. Why is the pound not reacting that strongly? That's because if the Fed hikes, the Bank of England is next to hike. Okay, so that's what's going on over there. That's the reaction in pound dollar. Dollar yen, we saw it rise also above 121, but it's still hesitant because we have a rate decision in Japan tomorrow morning. Let's see why the chart doesn't load. Anyway, we're back a bit lower now to 120.80 on dollar yen. Here is the chart. All right, so we climbed to 120, 120, which was a peak a few weeks ago. So the rise that we've seen to 120, 150 on Friday was a bit of a false break. Now you can see that 121 is still a more important line. Sorry, 121.20 is still a more important line than 121.50. All eyes are on the Bank of Japan. We'll talk about that in detail soon. Dollar CAD had a roller coaster day because oil prices suddenly decided to rise without any apparent reason, despite the rise in oil inventories, with no figure from Canada. But when the Fed came, it all reversed and dollar CAD went back up. Huge roller coaster there. New support at 131. Resistance more to the upside is, well, I think it would be more correct to put it here, just around 133, 132.80. And further resistance, of course, at 134.60, the 11-year high. Aussie dollar was hit yesterday by inflation numbers. Today it also received a few bad figures. From import prices were weak, and also the Chinese leadership said they want slower growth of 6.53. So that also weighs on the Australian dollar. It dipped below 71. It managed to stabilize. 70.80 was the low. New Zealand dollar. In New Zealand, we had a rate decision yesterday. They decided not to cut rates, but they did talk down the currency. They did send signals for rate cut in December. So this sent Kiwi dollar below support. This and the Fed, of course. The initial reaction was the Fed, and then the Bank of New Zealand, Reserve Bank of New Zealand, kept Kiwi dollar depressed. So the low is 66.20. Now we're at 66.50. And dollar Swiss is getting closer to parity. We had an early question from Jack Sarwild. He asked around about the Swissy, what happens if it hits parity, a global meltdown, or would it make the case for the Swiss to become reserve currency? And do you think the market will let it happen? So first of all, the globe will not melt down, okay? Now to the more serious questions about the reserve currency. The Swiss franc is more of a safe haven, but I wouldn't call it a reserve currency because it's still a small country. There are not so many Swiss francs in circulation. It is still considered a major, but there's more trade in Aussies and CADs even than the Swissy. With the ongoing intervention of the Swiss National Bank, there's no reason it wouldn't reach parity because just another weakness of the euro, the Swiss National Bank will make an effort to weaken the Swiss franc against the euro, and this will result in also dollar Swiss moving higher, weaker franc also against the dollar. So parity is quite close for dollar Swiss. Let's look at the last time we've seen parity. Well, let's look at the daily chart. Yeah, it was some time ago. It was only back in March when euro dollar was much weaker, but we did see the pair break above this level here, right? This level here is 99. So we did see it break higher, but above parity, we've already been there, done that. It's not, of course, it's a symbolic level, but it's relatively easy to get there because of the intervention of the Swiss National Bank to weaken the yen. Good morning, Jake. Good morning, Jean. We have another question. Up to where do you think euro dollar will retrace based on what? Let's take another look at euro dollar. Retracement, it's better to look for the retracement on the more short-term chart. So we had this high here at 109.50. We might see the pair perhaps challenge this again. Further resistance now much stronger. A clear separator of ranges is 110. The pair dropped to this level on Friday, dipped a bit below it, managed to rise above it, found some support now in the first fall at 109. 109.50, 110 are the next resistance levels. Support at 109. Really, really strong support at 108.10 because that was the low on July 20th, the post-recovery low. Okay, let's maybe see it here. You see we have quite a few stepping stones here. First we had 108.20 here back in May. Then we had here the July 20th low of 108.10, 108.08. And then we had another stepping stone a bit higher. So maybe this will be a first line. Anyway, once we have a collapse of 109, if we have that, then of course 108.40 is the first support, but I see very, very strong support at 108.10. Question from Jack Sorwell: why does the US care if China is stable? They said they are not afraid to fight a war with the US and almost welcomed the idea, it seems. Okay, so regarding China, well, the US imports lots of goods from China, has lots of trade with China. It's the world's second largest economy. It's the size of the Eurozone economy. If you don't have Chinese demand and Chinese selling cheap products, you have trouble in the US economy. So the US economy is relatively more closed than the Eurozone, for example, but it's still vulnerable to shocks in China. The United States is, like other countries, is still dependent on other countries in the world. Okay, we have a question from Serge. Please, what is it to expect from pound dollar and pound yen today, in your opinion? Sure. So let's look at the events today. We have first event for the day is net lending to individuals in the UK. So we immediately have an event impacting the UK. It comes at 9:30 GMT, which is 9:30 in London, and that's right here. So we have a few more figures together with it. Net lending to individuals was at 4.3 billion. We don't have expectations for that. We have at the same time also consumer credit and mortgage approvals. So we have three figures, actually also money supply. We have quite a few figures from the UK. None of them is important on its own. They're second tier or third tier figures, but they will still have an impact if they all go in the same direction. So consumer credit is, of course, more credit means more economic activity. It was on 0.86 billion, 860 million. It's expected to advance to 1.1 billion. And mortgage approvals expected to advance as well from 71 to 72.5. And for money supply, month over month dropped last time, but year over year also dropped. Okay, so if all the figures go positive, it's of course positive for the UK, for the British pound, and the other way around. Of course, if all of them are negative, it's bad. If they're mixed, I don't think it'll have an impact. Let's look at pound dollar levels. So 150 to 63 is the current trade. Quite choppy, trading more or less in tandem with the US dollar. Not in tandem, but not the moves here aren't extreme. Support 152, further support 151.50 and 151.15. Resistance 153 and then 153.70. 155 is the big price, but we're not there. Okay, so I think we have more interesting moves against other currencies. You asked specifically about pound dollar, so let's talk about that. 184.80, 184.30. Here also a bit of tension. We had a false break above 186, which was a support line back in September, and then we had a fall all the way here to 184. Currently 184.30. For the next move in pound yen, look for the Bank of Japan's decision. We'll talk about that soon. We've seen a much stronger movement on euro pound because of what Draghi did, and also yesterday. Look what happened. So it was a US event, okay, not related to the euro or to the pound, but we've seen euro pound more or less trade in a similar manner to pound to euro dollar. Okay, so we've seen this cross edge up, and then when the Fed said its word, it crashed. Okay, because the pound is less sensitive to the Fed. On the contrary, if the Fed hikes, the Bank of England hikes, and the euro is very sensitive. The euro is very vulnerable since what Draghi did to that, to the common currency back on Thursday. So here we have, let's draw a few more lines here. We're currently actually at support here at 71.60, further support on this line right here. Okay, which is 70.25, and the round number of 70 is of course below, but if we look a bit to support, it's at 69.50. So if you want to trade the pound, I think we have more excitement here. I mean, if you want ranges, of course, pound dollar is more stable. Pound yen will get more exciting, and euro pound is already quite exciting. So I hope this answers your question. We talked about major currencies reacting to the Fed, but let's talk about other events we had yesterday. RBNZ decision, no cut, they decided to leave it at 2.75, but they said they're worried about the currency, and if the currency will strengthen, they're ready to intervene either by cutting rates or by just selling the New Zealand dollar. We know that they in August they sold, they spent 138 million in weakening the New Zealand dollar, and they're ready to act again. We've seen a reaction. Everybody now expects, all the commercial banks that are talking about the next move of the Kiwi are talking about a rate cut in December in New Zealand. Okay, Australian import prices, we talked about that, but let's just show the number here if we have it easily available. Yeah, import prices rose only 1.4. Expectations were for 1.6. Export prices, well, no, there were no expectations. They remained flat. And we also had home sales, well, belated, and they dropped. I don't see that here. Anyway, we had sort of positive, not so positive figures from Australia. And also what the Chinese Prime Minister said, they want the growth target for 2016 to be 6.53, which is a very interesting and precise number. In any case, it's below what markets expect of 7%. That was the target so far. Okay, and we had Spanish CPI, which weighs on the euro. You can see that here. So the weak number from Spain makes it hard for, we had it just when we began the show. Well, we didn't have a huge reaction, but I think that weak data like this, weak figures, keep the euro from making a real retracement. The numbers from Spain, well, still negative 0.9 according to the HICP, to the European standard. And the non-European standard prices fell 0.7, which was worse than minus 0.6 that was expected. So when you hear that Spain is growing very nicely, remember that a significant part of this growth is not that the economy is outputting more, has more output, but actually that prices are falling. So the real value is rising, but it's not exactly the same. Okay. Were there more questions before we talk about the next event for the day, which is a busy one? So we have today quite a busy day. We have net UK figures. We talked about that. US GDP. That's the big event of the day. We have it at 12:30 GMT, right here. So in Q2 we had 3.9% annualized growth, and now we're expecting 1.6. If you look at the Atlanta Fed's nowcast, they expect only 1.1. But we can safely assume that the Federal Reserve had the GDP numbers in front of their eyes yesterday. And if they were more hawkish about the economy, perhaps we get a better number. Why? Because if we would see some more negative figures from some dovish, why would the Fed be hawkish and then see a terrible GDP number? They don't want to come out as fools, right? So I believe we'll have a stronger number above 2% annualized, and that's of course the key event for today. At the same time, as always on Thursday, we have initial jobless claims, and 263 is expected, a bit above 259. All in all, you can see an excellent trend in jobless claims. This is one of the better job figures we have in the United States. We're seeing it sort of steadily and gradually going down. It's excellent. This is what's expected at 12:30 GMT. Now, after the Fed finished talking, we have Dennis Lockhart, which is from the Atlanta Fed, which is relatively a bit more hawkish. He'll be talking at 1:10 GMT. We have pending home sales at 2. What are the expectations there? It's not as important as right here. We're expecting month-over-month 1% rise. Together, of course, with the GDP figures, we'll have the deflator, how much of GDP is consumption, how much isn't. And also, something I skipped upon is we don't only have Spanish CPI today in Europe, we also have German numbers. So we have the numbers trickling already now along the morning from the different German states. Germany has 16 states. And then we'll have at 1 GMT the full number. So year over year, we're expecting plus 0.2 and plus 0.1 if you look at the European standard, a bit higher than last month. Of course, feeds into the all Eurozone figures tomorrow. Okay, so we have a few questions. So let's pause for a few questions before talking about the next events. So Paul asks about dollar, Singaporean dollar. Well, let's look at that. I must say I'm not following this currency, but sure is interesting. Because let's see what we have here. 140 is the current level. We've seen action, well, related to the Fed, we saw the pair jump from around 139 all the way to 140.50. In the short term, we have support here at the very round number of 140, and resistance, well, at the top. These are the short-term levels, okay? Lower here we have 139, and here at 138.84. Okay. Bigger picture, let's look at what's going on in Singapore. I must say I'm not following the small economy. But like other emerging markets, even though Singapore is a developed country, developed small country, island country, we've seen the US dollar rise very, very sharply against the Singapore dollar in the past year and a half or so, in line with strengthening against other currencies. The top line here, the sort of long-term high, is just under 144, level we haven't seen in many years. Well, since 2009. So all in all, similar to other currencies, the trend is up. On the downside, we have support here on the long-term charts. I believe the trend will continue higher because of expectations for the Fed to hike. So these are, I hope this answers your question. Jake asks, New Zealand and Aussie charts again, targets. Sure. I'm bearish on the Australian, well, also on the New Zealand dollar. I think we talked about this in previous shows, that the big move higher that we've seen in recent weeks of the Aussie is just a correction. The trend remains down. China is slowing down, maybe 6.53%. Growth target, maybe something else. In any case, the RBA, there's a good chance they'll cut next week. It happens on Tuesday because of weak inflation, weak China. So the targets for downside are 70, 74. If we indeed get this break confirmation under 71, sorry, then 70, then the double bottom here of 69.35 level I'm watching. Okay, this will make things easier to see. And then, of course, we have 69. On the top side, we have 72 and 72.80. So these are the levels I'm watching. And the RBA decision on Tuesday is the next big thing. New Zealand dollar, 66.59. The situation in New Zealand is better. Government has a surplus. Prices in Auckland are higher. The economy is more booming. But also their inflation is a bit low. And the Reserve Bank wants a lower New Zealand dollar. We have here a nice support line, right? 66.15. On the top side, 67, which was the bottom right here. 67.40 is sort of another weak resistance. And further on the downside, we have 65.30. So these are the levels. This answers the question. Yeah, Jack, sir, well, they try not to be fools. That's not always the case. You're right. The Fed does make a lot of mistakes. I think it still thinks it only saved the US economy after the crisis, and it doesn't take responsibility for its share in the deterioration. Of course, they're not to blame on their own, but what's going on in the US economy and the Fed cannot be detached from that. Okay, more questions? Let's talk about more events in the meantime. So Japanese inflation figures at 11:30 GMT. Let's see what we're expecting here. It's just before the rate decision. So the National Consumer Price Index was at 0.2. Tokyo one is more fresh. It's for October, and especially excluding fresh food, we're expecting a drop of 0.1 year over year, better than 0.2 last month, but all in all reflecting deflation, reflecting the fact that the Bank of Japan is far from reaching its target, right? Also here on the national figure for September, we're expecting more of the same, 0.1 and now 0.2. Say here that the screen is blurred. Let's see if we can improve the quality. Maybe it's a bit better now. I'll just enlarge the font, so I hope it's better now. In any case, the Japanese inflation figures are just a preview for the real thing, which is the rate decision in Japan. So let's talk a bit about that. So we don't have the exact hour for the rate decision in Japan, but we know that it's early in the morning, around 3, 4, 5 GMT. They just release it once they finish their meeting. This time, the decision is important. The Bank of Japan meets 14 times a year, and it's not always important, but this time they have the semi-annual outlook, which happens only twice a year, and they have probably they'll have some figures about showing that if Japan is in a recession or not. Okay, in Q2 and Q3, there is a good chance that the economy contracted. Now, up to now, so far, we had hints that from the government, especially, which oversees the Bank of Japan quite strictly, we had hints that the Bank of Japan is unlikely to act. Okay, but in the past 2 days, we had some news. We had an advisor to the Prime Minister, to Shinzo Abe, say that it will not be strange if the Bank of Japan acts. Okay, and then we had another report floating on the Nikkei news agency saying that we have there's some chance of action. Okay, what type of action can we have? If they lower their forecasts, that's priced in inflation forecasts. It's not news. If they also change the composition, okay, that's a small move. More ETFs, other bonds, interesting, but not a huge deal. I see dollar yen still around 120. The big deal will be to change the pace of bond buys from 80 trillion yen to a higher level, 90 or 100 trillion. Now, last year they did surprise with exactly that, and the Japanese yen collapsed. There is a chance. I've been reading bank analysts. Goldman Sachs, for instance, see a good chance of them acting. RBS, Royal Bank of Scotland, don't see them acting. Anyway, in any case, we'll have a big reaction. If they don't do anything at all, we have a policy of the yen strengthening, dollar yen falling, perhaps again challenging 118. If they enlarge the total size of QE, then we could see a break to 122, 123. So really a lot depends on this decision. I'm genuinely hoping for more volatility from dollar yen, but I also believe that there's a good chance we'll see a lot of action from there. That's the big event after the GDP from the United States, of course. So that's the big event for tomorrow morning. Of course, we'll have the results before the show, and we'll discuss that in detail tomorrow morning, of course, the results. But apart from the BOJ decision, so regarding that, we have a question from Paul here. What do you think the Bank of Japan will do in all probability? Thank you. Well, I think there's a chance of 55%, let's put it this way, that they will act, that they will want to jump into the global currency wars. I do believe the government that the chances were indeed low until a week ago. But my reasoning for action is not only the situation in Japan, not only the weak economy there, low inflation, chance of recession, things like that, but what Draghi did last week. So we had ECB president sending huge hints about more action, weakening the euro, It's a significant trade partner of Japan. We had the following day, the People's Bank of China cutting interest rate, surprising with the timing especially, and the same week that they reported okay GDP growth. So I think the Bank of Japan will just want to jump into the game and add action, thus weakening the yen, strengthening dollar yen. So that's what I see. Another question from Jean. Jean Fab, speaking about the video, it would be good to have the button to enlarge the video, not full screen, but make it bigger. That is possible if watching on YouTube, but not if watching on your website. I guess you can put that button also on the website so that we can stay on the website and move to YouTube to have a bigger screen. Okay, that's good advice. I'll try to do it from tomorrow to have this auto enlarge. Let's see how it looks like. But anyway, I think that's a nice, that's great feedback, and thank you, John. I'll check it on the website as well in the meantime. So other events for tomorrow, we have also we have the in New Zealand we have ANZ business confidence. Let's look at what the expectations are. It's right. Yeah, ANZ business confidence. No, we don't have expectations. Last time it dropped all the way to, sorry, it recovered a bit from the lows, but it's minus 18.9. That's important for those trading the New Zealand dollar. We have Australian PPI, producer price index. It's a bit less important than CPI. Well, it isn't important at all because it came after the CPI. Had it been released beforehand, it would be better. And we have German retail sales before the show tomorrow morning. So German retail sales, we're expecting them to, no expectations here. They dropped 0.4 last month, but rose 2.5% year over year. Let's see what comes out. So these are the main events for today and tomorrow. Very, very busy as I see it. We already had more excitement from the Fed than I thought we would have, and now we have GDP, Bank of Japan, and quite a few other figures. Let's talk a bit more about the events for tomorrow, which close the week. We also have here comments from MRC, who says you can put full screen, no problem. To MRC, not full screen because you need to see the chat and the other charts. Right, okay. So I hope you get along with that. MRC, yeah, okay. So I'm very glad you're helping each other with getting the best configuration for the show. So that's great. Anyway, I'll try to put a full screen button or something like that. Okay, so tomorrow, the last day of the week, let's recap the whole week. We had Monday, German IFO was mixed. US new home sales were bad. UK GDP missed, and that hurt the pound. We had bad figures from the United States. Weak durable goods orders, especially the core number. CB consumer confidence missed. Everything looked bad in the United States until the Fed came and said it's not that bad. So perhaps we have a good GDP number today. Australian CPI missed. Weaker Australian dollar. RBN's a decision. No cut, but warning, pushing the pair down. Today we have US GDP. Tomorrow, the Japanese rate decision. And tomorrow, we also have interesting figures for euro dollar. We have Eurozone CPI. It's expected to stay the same, minus 0.1 on the headline number and minus 0.9, sorry, and plus 0.9 on core, okay? And for those of you trading the roller coaster Loonie, we have the Canadian GDP tomorrow and a few other US figures. We'll talk about that in detail tomorrow. So you mentioned the charts here. Let's talk about other charts. Euro Swiss, very stable, very supported by the Swiss National Bank, 108.54, reached low of 107.50, almost there. And now we're back in range thanks to Thomas Jordan and his friends at the SNB. Resistance is at 110, high resistance, but the levels are quite limited over here. Euro pound, we talked about that, falling monetary policy divergence. And in the Eurozone, there's more QE on the cards. In the UK, they'll hike after the Fed. Euro Japanese yen used to be a safe haven currency, used to be not that long ago, but now it's falling because because of Draghi dragged the euro down. Pound yen, we talked about that. Looking for a hint from Japan. Of course, if we have a massive QE from Japan, we'll see pound yen, I believe, break easily above 186. But if we have the other kind of reaction, no action, then we'll see it go down. And which other currency pairs do you guys trade? Are you looking at? In the meantime, euro odd. Okay, we talked about that, I think, yesterday or a few days ago. This is the 4-hour chart. I don't have any lines here, so let's put a few lines. 151.55 support. Here we have resistance at the round number of 158.15. 162 above there. And we had a swing high here. 165. Let's put another line to the downside. I would put it here more. No, let's put it here. That's 147. These are the lines I see on euro odd. All in all, both currencies are vulnerable. So because we expect some kind of easing or weakening from Australia because of China, and that's negative for the Aussie. And for the euro, it's negative because of Mario Draghi, because the ECB is expected to act. So all in all, I don't see a very clear direction for the pair. Perhaps the euro is a bit more vulnerable. So in this case, we could have another an extension of the fall of euro dollar because of fundamentals, but it's not a clear cut like in a few other currencies. For me, euro dollar is more clear cut, that we have more room for the downside, and euro odd is more mixed, for example. Okay, because I see both currencies falling against the US dollar. But in any case, these are the levels to watch. 151, 55, 147 on the upside, 158.15, and 162.60, somewhere over there. So these are the levels you can see. Perhaps we'll add just another line here in the middle, because that's also an interesting level at 156. Okay, separated ranges here and also resistance here. So these are the levels on euro Aussie. Any more currency pairs? I'll take a look at oil. I must say I don't understand why the price of oil jumped yesterday. It looked like some profit taking or something like that. It's totally unjustified. Iran is expected to come back online, and well, at least today we're seeing it fall, so it makes more sense to me. And inventories are just flooded with oil. So this huge squeeze here, most of it happened in just 1 hour yesterday. I can't find a good explanation for that. Another question, do you think the pin bar on the daily is not valid because of odd and euro odd? Pin bar, euro odd, daily. Don't have a good answer for you, sorry. This line here, in general, I see the pair falling, so looking at fundamentals more than at technicals. Yeah, I see the pair sliding a bit more. Any more currency pairs? Any more events you want to talk about? We'll recap the Fed in any case in the wrap up. Let's just take a look at dollar yen to remind us that it's stuck in a range. Did try to move out, moved below to 118.10 and moved above 120, 120, which I still see as resistance. So we did have more action than beforehand, but all in all, it's still in love with the 120 level. Euro dollar, as we speak, is moving a bit higher. but constrained by 109.50. Market manipulation stop hunt, I guess you're referring to oil prices. Yeah, I think so as well, but the fundamentals point to lower ground. By the way, the rise in oil prices yesterday, no, actually I can't see it over there. Norwegian krone. USD CAD trade buys, please. I guess with FOMC monetary policy tightening. Yeah, Paul asks about dollar CAD, the roller coaster currency. So let's explain what happened there. I see dollar CAD is moving higher. I'm bearish in the Canadian dollar because there's just too much oil. Canada is in recession. The Bank of Canada cut forecasts, and you name it. Tomorrow we'll have Canadian GDP. Maybe I'll be proven wrong. Maybe it'll come out better than expected. Dollar CAD, I think the rise here is justified all the way to 132.80. The fall here, because of oil prices, is unjustified, and then we saw it rise back up again. Resistance here at 132.80, and then further resistance at 134.60, which was the 11-year high for dollar CAD, the highest since yeah. So yeah, also because of Iran, we're seeing it move higher, and oil prices could fall in this, and dollar CAD could rise higher. So these are the levels I'm looking at: 132.80, 134.60, and the downside 132 and 131. That's my bias because of oil, because of Fed tightening. Now, the Fed tightening also has another aspect, because if the Fed is going to tighten because the U.S. economy is doing well, it's also good for Canada because Canada depends on U.S. demand. But at the moment, stronger U.S. dollar is just sweeping the board, and this also includes the Canadian dollar. So that's also, of course, another reason to see dollar CAD rise higher. CAD is currently more sensitive to oil prices than to the U.S. economy. Question from Syrup on the S&P 500. I must say I'm not following indices quite closely, but I must praise Dale Pinkert of the LAR. He said yesterday before the Fed that he sees a good chance of a more hawkish talk because the Fed wants a stable stock market. When stocks were falling before the last Fed decision, they went more dovish and helped stocks recover. Now they wanted to perhaps depress the rally. I'm not totally destroying what he said, but that was more or less the gist. So I see stable stocks in general, and I'll get you a chart with some levels tomorrow, I hope, because we're a bit running out of time and I don't have this chart prepared. So I'm sorry. Quick question, CAD yen breaking the flag daily to the upside. Let's see, I do have CAD yen. Let's try to get it quickly, but $91.20, we are here. I see everything here is very, very choppy. Both currencies weakened against the US dollar. The next move depends. Well, we have tomorrow the rate decision in Japan and Canadian GDP. The rate decision in Japan is more important. If they'll ease, as I think they will, then the pair can shoot higher, breaking up on the daily. I don't see that. I see choppy range trading. So that's it for CAD yen. Okay. So it's time to wrap up the show. Let's begin from the beginning. So this is the wrap up for the live market open on Thursday, October 29th. We had lots of action thanks to the Fed. The Federal Reserve went hawkish in 4 ways. It was not too excited about slowing employment, not too excited about slowing inflation. They see the long term as stable. More importantly, they removed the reference to recent and global financial developments, not so worried about China, or at least not so worried about the Chinese stock market and the stock markets in general. And the most important hint, they talked about the next meeting, about setting the rates. It's still data dependent. We have to see GDP today. We have to see 2 more NFPs. We'll have lots of Fed speak from now until the meeting in December. But in general, the markets expected the Fed to remove the chance of a rate hike in December, and they kept it firmly on the table. So we had lots of reactions over there. Let's quickly look at a few charts in the wrap. So we had euro dollar extend its falls, reaching around 109, even dipping a bit below this level. Currently stabilizing. Pound dollar a bit also dropped, but a bit more muted move because the Bank of England is expected to raise rates after the Fed. Dollar again, really waiting for the rate decision in Japan. So we had the dollar yen rise above 121 to 121.20, but a slide back. Dollar CAD, well, it fell a lot because of rising oil prices, and now it's rising back up. Good chance of moving higher, 132.80, 134.60, downside 132 and 131. Aussie dollar depressed by the Fed, by falling import prices, and by lower Chinese targets. Under 71, 70, 40, and 70 are support lines. 72 is resistance. Really strong support at 69.35. In New Zealand, we had the Reserve Bank of New Zealand not cut rates. That was probably a smart move after the Fed went hawkish, but they did hint of a rate cut next month, and they're worried about the exchange rate. 66.15 is the next support line. 67 is resistance. Dollar Swiss getting closer to parity. We began the show with that. 92.22 with the weaker euro against the dollar and the Swiss National Bank intervening. Parity in dollar Swiss is within reach. Next big event for today is the US GDP. Official expectations stand on 1.6%, but we can perhaps expect more because the Fed was hawkish. We also have components of the GDP and US jobless claims. And then we have a first reaction from the Fed on its decision yesterday from Dennis Lockhart, pending home sales. Japanese inflation figures, but this time it's less important because we have a rate decision in Japan. We had few news reports talking about that it will not be strange for the BOJ to act. I think there's a better chance than not that the Bank of Japan will act. And in this case, we could see dollar yen shooting higher and other yen crosses also reacting in the same manner. But it's a very close call. It's a big event because they have the semi-annual outlook. Elsewhere, we have today, of course, inflation we had from Spain disappointing, and we have from Germany, and it's all a warm-up for tomorrow's European inflation figures. All in all, we have lots of excitement in markets, quite a busy day. You can see here on the screen more events in New Zealand and Australia. Also, a few in the UK just after the show, but main eventer, US GDP and the rate decision in Japan. All in all, stronger dollar, but now some consolidation. Will it continue rising? It's an open question. 109.50 is resistance, immediate resistance in euro dollar, and it's very close now. And then 110 on the downside, 109 and 108.10, which is really, really strong support. So that's it for today. I hope I didn't speak too quickly because I wanted to cover so many topics. Promise to get to you back tomorrow with the S&P charts and some more talk about that. If you like the show, please tell your friends, colleagues, trading partners, whoever that may be. And so I guess that's it for today. See you all tomorrow. Trade safely and good luck. Thank you. Bye-bye.